Beyond Meat's latest earnings call revealed something interesting. The revenue beats the expectations, but there was a big net loss. So what's really going on behind those numbers? In this video, we will uncover what management said, what investors might be missing, and whether this could be a massive buying opportunity for the long-term investor. So without further ado, let's dive right in. We're now looking at the charts of Beyond Meat on TradingView, and we can see here that the market just opened and it's now trading at $1.29. And we can see that the recent earnings, that the reported net income was minus $1.44, which is much more negative than they estimated. But we can see that the reported revenue was higher than the estimated revenue, and that was the good news. So here on the official site, investors.beyondmeat.com, we can see Beyond Meat reports third quarter 2025 financial results. And here we can see that the net revenue was 70.2 million. So it was above expectations, what we talked about, but still a decrease of 13.3% year over year. And here we can see the net loss that was 110 million, $1.44 per share, and compared to the net loss of 26 million or 41 cents per share, which means that the loss was insane and above expectations. But we kind of knew this because the earnings were postponed to November 11 because of a cash impairment. And here we can see that the net loss includes 81 million in expense related to non-cash impairment charges. I wasn't expecting it to be this big. And they basically had assets that they had to write off because they were less valuable than they expected it to be. So luckily, this is only a one-time thing. That will not affect the next earnings, which is great. So the third quarter conference call was on November 11th, and you could have watched it on the official investor.beyondmeat site, or you can just now read it on Seeking Alpha, and they have like the version where they write everything down. And you can see, for example, what the CEO said. And one of the best things he said is that they reduced the debt levels by approximately $900 million, nearly 75% of our total leverage, and put in place a path to potentially convert another 200 million for a total reduction of over 90%. This is great. Of course, the downside of this is that shares get diluted because they create more shares to sell them. However, this is a very critical move that Beyond Meat did very well, because now they have more time to fix the company without going bankrupt in the near future. So what was actually said in the conference call of quarter 3? These are the most important things that I got out of it. And the first one is that the CEO focused on a turnaround and not growth, which means that they want to reset everything, operations and balance sheet, and then slowly grow to become a great company again. The second point is that they reduced debt by 900 million and they raised 150 million cash via ATM program at the market. And that's basically they're gradually selling shares at the market to raise cash. And of course, if you create shares, then each share becomes less valuable, and that causes dilution, and that's what makes investors worried. But you need to understand that this company is not doing well on the balance sheet, and they don't want to go bankrupt. So this is their only way to raise cash, give themselves time to completely turn around and become profitable in the future. So this is a great strategy to do that. Of course, the shares will be diluted because of this, which is not good for investors on the short term. Plans to expand beyond burgers, new products and categories. They want to expand their product line and not only focus on the mimic meats like vegetarian meat, but also just plant-based food in general. And the demand remains weak, especially in the US retail and food services. The revenue was down by 13.3% year on year, which is not great, but it was still above expectations. And then the last point is they are committed to cut costs, because we know that they have a lot of costs for producing these products, and they will exit unprofitable lines and target EBITDA positive soon. Now let's quickly summarize and go over the strengths and weaknesses of this earnings call. So the biggest strength, that in this quarter they reduced debt by 900 million, and the balance sheet looks much better now. They raised 150 million cash, more runway for turnaround. So they're not going to go bankrupt anytime soon, which is great. They have time to fix things up and become more profitable. They are focusing on innovation expansion beyond burgers, so more plant-based foods and not necessarily food that mimics real meat. And there's a slight revenue beat versus the expectations, but of course year on year it's still lower. And the weaknesses is there's weak demand in the US, retail and food services, there's less demand. The margins are shrinking and that makes the path to profitability slower. And the soft Q4 guidance, so they are not expecting too much revenue for the next quarter. So these are the concerns. So here's a quick SWOT analysis of Beyond Meat. And we can see that the strength, it's a pioneer brand with high recognition. It's a popular meme stock right now that can also happen through mass psychology. They have good product innovation and they have key retail and food service partners. So they're distributing their products to Walmart, now Hardware Cafe, and they're selling over 80 countries. So that's pretty good. Their weaknesses is that the products are expensive, high premium price point. They have losses and debt. They fix it with creating shares and selling them, but that creates dilution and declining US category sales. Revenue was down year on year by 13%. And the opportunities is that they have major international growth potential in many other countries, expansion to new categories. They leverage health and sustainability trends. Demand for plant-based meats is still rising with 20% CAGR, compounded annual growth rate, which is great. And they if they improve their economies of scale, they can be more profitable in the future. The threats is the competition from Impossible Foods and many other private companies that do really well. And their negative perception of overly processed food is also can be a threat. And of course, if there's an economic crisis, then this is not the most essential thing for survival. So that can also reduce spending. So in short, these are the strengths, weakness, opportunities, and threats of this company. And let's continue. Yesterday, I posted on StockTwits. Reported revenue was solid. The net loss was mostly a one-time asset write-off. Still bullish on Beyond. So I understand that there are a lot of risks with this company. The earnings weren't perfect, but it's now trading at $1.20. And I think that this company gives an insane risk reward. So if you allocate a small percentage of your portfolio to this company, then you either lose this allocation or you can win big. Of course, always remember to avoid these 3 mistakes by not using leverage, not breaking allocation rules, and definitely don't fall in love with one business or stock. So I'm very bullish on Beyond Meat, but I don't go all in. I only allocate 2 to 5% of my portfolio to Beyond Meat, which means that if Beyond Meat goes to zero, I can maximum lose like 2 to 5% of my portfolio. But if this company can go all the way back and it recovers, you can make a lot of money, even with a small percentage allocation. But if you go all in, then you can lose everything, or if, let's say you lose 80%, 90%, and then you need like 400, 500, 1000% to even break even, which is very hard to do. So that's why I only allocate a small percentage, and that is enough to get a lot of gains. And it's also easier to diamond hands if you only allocate like 5%, for example. So we're back to the charts, and it's now trading at $1.19. And you can see here that my average cost price is around $1.85. And I think we might be able to hit $1 before it bounces up. So if it hits $1, I will buy a little bit more, not too much. What I got from the conference call is that they focused on the last quarter on reducing the debt. And they did it very strategically by creating shares and then selling it to the market. This created dilution, but it gives them time to fix this company and turn around. Always do your own research, do your own due diligence. And I hope you enjoyed this video. If you want to stay up to date on Beyond Meat, then feel free to like and subscribe. And let me know what you think about Beyond Meat in the comments below, whether you're bullish or bearish. And I'll see you in the next video.